Good afternoon, everybody. Very warm welcome to NIBA's webinar around the NIBA code. Before we kick off, I just wanted to acknowledge the Gadigal of the Eora Nation, the traditional custodians of this land, and pay my respects to the elders, both past, present, and emerging. Folks, today's webinar is really for the purposes of coming to terms with the code, understanding where we've come from, understanding where we are, and understanding where we're going. What we've tried to do, or really all the way through the discussion on the code, is to make it as engaged and engaging as possible. The code belongs to all of us. The code belongs to NIBA members. And as such, as custodians collectively of the future of the code, it's really important to have conversations like this, but the conversations we've already had together with the conversations we're going to have, so that ultimately we can debate the key issues and put the code for the 2027 version and beyond on really strong footing. So really encouraging to see so many people involved in this discussion. Really encouraging to see all the discussions that we've had to date, really good interest from around the marketplace, and certainly at a board level, this has probably been the biggest theme probably over the last 12, 18 months. Every time the board has met, we're always having substantive and engaged discussions around the code, around the future of the code, around stakeholders, and making sure that we land in a place that's fit for purpose, but also challenging and aspirational. Because I think in the end, codes are in many ways a trust mark for the profession. And, the context changes. Consumers today expect more than they used to expect. Consumers of tomorrow will expect more than they get today. And so that's one of the reasons why the code has to be agile, it has to be nimble, but we as a collective have to own the weightiness of self-regulation that a code provides, and making sure that we're looking definitely towards the future. So that's just a little bit of background. You'll see at the bottom of this slide the banner of Your Voice, Your Code, and hopefully you'll start to see that everywhere you look, a little bit like the red car, now that we've pointed it out. The intent here is that it is your voice, our collective voice on our collective code becomes important. And so the feedback, the learning is equally important. You'll hear a little later from both Di and Ben in terms of where we're heading on that. In terms of today's webinar, there are a couple of things that we've introduced. So it is the first of a number of engagements that we'll do, and hopefully you've seen some of the previous ones. I'll touch briefly in a moment on where we've been and where we're going. I'm then going to hand to Di to take us through the 14 recommendations that came from the independent reviewer, Phil Curry's, thanks, Ben, Phil Curry's recommendations. And then Ben's going to pick up the NIBA board view, where we've been as a board, and the response. Hopefully everyone saw the document that was produced in mid-Jan and distributed very, very widely. That gives a very considered view. The purpose of today is to try and unpack certainly Phil Curry's response and review, but also the NIBA board's review. We're going to introduce a couple of polls today. So we're really interested in people's feedback, and you'll see polls come up. I think we've got 3 of them planned through the webinar. So I encourage you to jump on, give us your instant considered view. It's really designed to give us a bit of a flavour, and we'll obviously share that data with everyone. And then at the back end of today's conversation, we'll kind of talk a bit about how to engage from here, what key parts of the code will change, and then kind of what the next steps are. So that's the direction of travel at 3:05. I might just introduce our all-star cast. I'm sure Di Phelan is no stranger to anyone on the phone. Former Pres of NIBA, has really led the code conversation, is currently the chair of the board subcommittee on the code and the code governance process, and has been instrumental in this process really since the beginning, including the selection of the independent reviewer, together with doing activities like this, which is helping to guide, inform and educate the membership. So big welcome to Di, who stepped out of a big session to join us today. And for those of you who've not met Ben Marshan, Ben is our policy lead within NIBA, working very closely with our Reg Affairs Committee on a lot of our government submission work, and in particular on the code. So Ben brings with him a very long background in the financial services sector, and in particular in associations, leading and guiding, intense conversations like what's the right place for the code to land. So welcome to Ben. So briefly, where have we been and where are we going? So look, folks, there's a current code obviously in place. NIBA's code has been in place in various iterations now for a long period of time. There's basically been in the code architecture and governance a review every 3 years. And so at the back end of 2024, in fact, in the middle of 2024, we started the conversation around how will we establish and set up the review for landing the new code. And so we launched that towards the end of 2024. We appointed in 2025 Phil Curry is our independent code reviewer. Independence, transparency, are really important hallmarks of this conversation. Consulted widely, and the team at the IBCCC, Prue Daniela in particular, and their team were very valuable in terms of giving us guidance around what does a good review process look like. We took that very much to heart, and so through 2025, there was significant consultation, and I'm sure you would have seen it, whether it was online, whether it was webinars, whether it was at the convention, whether it was in the magazines, whether it was roundtables. We ran a lot of different ways and formats for the marketplace to engage. Of course, the marketplace is the members, so today is predominantly a member conversation, but understand that there are a lot of stakeholders that sit in and around our sector who are keenly interested to participate, whether it be ASIC, whether it be AFCA, whether it be the ACCC, whether it be New South Wales Fair Trading, whether it be the consumer groups. There are a lot of interested stakeholders who've all had a chance to have a say. And so at the back end of 2025, so in December, the independent reviewers report was delivered. That kind of considered that broad range of feedback, and that led to, and I'm hoping people have had a chance to have a look at it. You'll hear Di talk about the highlights of that, but it basically led to 14 key recommendations. NIBA's board had been, like I mentioned, pretty much all the way through 2025, and certainly at the back end of 2025, every time we met, we were workshopping our view on what the future of the code would look like. And certainly we spent a lot of time with Phil unpacking his thinking and engaging with his thinking so that we could land, and we consulted widely. And so on the 21st of January, we launched our response to the independent reviewers report, and you're going to hear Ben talk about that in a lot of detail. And then on the 16th of Feb, so not long ago, we officially launched Your Voice, Your Code. So officially have launched a consultation period. It is now officially open from the 16th of Feb and will close, as you'll hear Ben say, on the 2nd of April. So we're now in the period where we're really requesting, inviting and encouraging members to engage with the code content, and then provide your feedback. And you'll hear Ben talk about a bunch of different ways that we can do that. So that's where we've been. Where are we going? You can see on there, this is draft for the record. This is a direction of travel. It's an intent piece. We'll be guided by the feedback, but we felt it was important to give everyone on this call and beyond a sense of the timing in terms of where we're going. So consultation will close on the 2nd of April. Obviously, we will release a draft code in late April. And you'll hear Ben talk about plain English, and that's a very weighty task to take what is currently a weighty document, add in all the feedback, and then rewrite it in plain English. Is a significant piece of work. Ben, I'm sure we'll talk to that in a moment, so that we can get by the middle of 2026 lots more board involvement and engagement, and ultimately board approval. At the NIBA convention in October, we will spend a lot of time talking about it. The last two dates, please treat as a draft and as a direction of travel. The intent, of course, is to have this locked and loaded. 2025 was about taking our time to consult widely. The front end of 2026 is similarly, and then we want to get our skates on. We are keen to make sure that we're in an effective launch date of 1 Jan 2027, but like I say, we'll be guided by the feedback. And then we're discussing whether there's an effective date, a compliance date, and we are mindful of our IBCCC colleagues on the call today. It's a conversation about when will this hard start versus soft start versus compliance date. So direction of travel still to come, but hopefully that gives everyone a sense of where we're heading, an intent of where we're heading. And again, I wouldn't underestimate, just to give you folks the flavour, this is hard. It's hard going. It's hard yards. One of the things that we are very mindful of is the code process of last time round, and for this time round to make sure that we spend a lot of time consulting. So one of the things we spoke about at board is that within our major member groups, we'll be looking to run workshops. We'll be looking to continue on these kind of conversations through webinars and so on, having the availability, and Ben will talk to this in a moment, but just making sure that people have a chance to have their say and their voice. What we don't want to do is we don't want to get to here's the code after all the work, and then people go, oh, that's great, but I don't like this, or I don't like that, or you should have considered this, or you should have considered that. This is very much the time frame for that to happen, so that when we finally land the document, it's actually had the time to consider people's views along the way. So, folks, that's the intro. Hopefully it gives you a bit of a steer. I'm now going to hand over to Di to kind of take us through Phil Curry's 14 recommendations. Welcome, Di. Over to you.
Thanks, Richard. Can I just, before I start, reinforce that that desire for us to get as much much feedback and consultation. It really is your time to have a say on what we'll talk about, the 14 recommendations, but also what we get, Ben and I will discuss in more detail. So if we start off, we're just going through, and I'm just going to recap on what those 14 recommendations actually are. So if we start with code structure, accessibility and disclosure, the first one is to recast the code as promises to clients. The second recommendation was to make the code contractually enforceable. And the third one was to extend remuneration disclosure to all individual and small business clients. So then if we go on to disclosure practices and conflicts of interest, the recommendations here were that the IBCCC were to investigate broker disclosure practices. The fifth one was to mandate disclosure templates at quotation and invoice time. The sixth one was to consolidate conflicts of interest provisions into one section. And the seventh one was that the IBCCC to investigate conflict management practices. So then if we go on, grouping these together to client protections and governance, the eighth one was to update the vulnerability provisions. The ninth one was to import the FASEA Standard 9 into the code. The 10th one was the IBCCC to investigate personal versus general advice boundary, extend the renewal contract from 14 to 28 days. Number 12 was to introduce explicit record-keeping obligations, I should say. The 13th one was to mandate annual IBCCC inquiries. And the last one was to move to a 5-year independent review cycle. So they are the 14 recommendations grouped into those 3 headings. And we'll now get into, I'll hand over to Ben, and he's going to provide more detail about the board's view on those 14 and where we landed in our response. Welcome, Ben.
Thanks, Di, and thanks, Richard, for the intro. Hi, everyone. I'm Ben, and anytime, please feel free to reach out to me. I have the unenviable task of pulling all of this together into a new code for you. luckily, it's something I do love to do. Weird, but it is something I do love to do. So I'm happy to answer questions, happy to have conversations. Please reach out and get in touch. There'll be an email address later on, and you can always feel free to email me there. So as Di said, the independent reviewer gave us a big report that stepped through everything he'd observed, everyone he'd talked to, provided his consolidated views around things that need to change around the code. I'll make the point that compared to most of the industry codes or professional codes that are sitting out there, 14 recommendations is really not a massive amount of change for this cycle of the code, particularly given everything that's kind of going on around the world and around the country more broadly, and even in our particular area of insurance. 14 recommendations is really means that the code is working well. The clients that you are providing your professional services to are getting the right kind of outcomes. And that's something I think collectively we should be very proud of as a profession, that we're doing the right thing. It's being recognized. There's a few tweaks we can make, but we're heading in the right direction. I've lost the number off the top of my head, but the ICA, for example, in their code, they've had over 100, I think it's nearly 140 recommendations for amendments to their code in comparison. So working through 14 is a testament to the great work and the professionalism that you are showing on a daily basis, given and that's been recognized in this report and the recommendations. As Di said, there are 14 recommendations. There are a group that the board is supporting. There are a group that the board has alternate ideas on how we can take some of the ideas that were put there through the report and some of the findings that came out. And there is a group that we kind of mentioned that they fit better in the IBCCC governance structure and the agreement that we have with the IBCCC in how they monitor, how they do investigations. So I'll cover those off quickly as well. So the recommendations that the board support, the first one is extended remuneration disclosure. So the code will be extending remuneration disclosure to all retail clients under the Corporations Act definition, regardless of the policy type. So some policies will not normally need retail disclosure around remuneration. We had a situation where it came in the last code and then went out again. So we're going to make that clear. It's going to include small business clients, and the feedback and what we've seen is that many members are already doing this, but the code's now going to set a consistent standard across the profession on what needs to be disclosed. In saying that, what we want to consult with you on is, and we'll talk about this in a bit more detail in a second, but how should that be implemented? What should it look like? Where should it sit in your client documentations? And when in the relationship should that be provided? The second recommendation that we are looking to accept is consolidating the conflicts of interest guidance into a single section. So currently the conflicts provisions are scattered across 4 sections of the code. So for clients, it can be very difficult for them to understand how conflicts of interest are managed through reading the code, because they have to go to different sections to get a clear picture of what that looks like. So what we're going to do is consolidate all of those into a single section, so clients and you can find in the code this one section that sets out the protections around conflicts in a single section. To make it easier for you to also comply with conflicts management that are covered in ASIC Regulatory Guide 181, we're also going to consolidate everything in a way and in a structure that aligns with the Regulatory Guide 181. And so you'll be able to go to a single resource and have a clear understanding of what your conflicts of interest might be and how to better manage them through using the code as the source document for best practice around conflicts management. So that's going to make it easier for the clients. It's going to make it easier for you to know your obligations, and it'll all be much tidier than what it is at the moment. The third one is something that we talk about this on an ongoing basis, and it comes up almost on a yearly basis, particularly around the summer holidays, where there are natural disasters. There are all sorts of things that go on, which create situations where some clients are put into vulnerable situations. The code already has vulnerability provisions in it. So we're not looking to create something new in terms of how the code treats and provides guidance to you around vulnerable clients. But given the catastrophic events that we've seen across Australia over recent years, our framework needs to evolve to keep up with the realities of what's happening with Australians on the ground and the services we're providing to them when something happens. So we're going to update the guidance in the code around vulnerability provisions. There are amendments that are going to be made to the General Insurance Code as well, which we want to align with as closely as possible so that both you as brokers and the insurance companies who obviously hold the products are more closely aligned in how vulnerability provisions operate. But we're going to consult with you on the specifics around how that should be written, how it should operate, and get your insights, having dealt with clients in these kind of situations. One of the big things that came out of the review, and if you look at IBCCC data, one of the most persistent breach areas with the current code is around contract renewal and not providing clients with enough and customers with enough time to have conversations around their policy renewal before the expiry. So what we're looking to do is move the contract renewal period from 14 days, as is currently set out in the code, to 28 days before the policy expiry. Clients told Phil that that's what they want. Earlier conversations about the renewals of their policies. So it gives our clients more time to consider their insurance need, consider the options that you're bringing to them as their broker, and addresses one of the most consistent breaches that are noted by the IBCCC, which relate to renewal timeliness. So 28 days are going to give room for everybody to make sure that renewal process, that contract renewal, happens in a more a less stressful, more efficient, more engaging way with your clients. One of the recommendations was around record keeping obligations. Obviously, good records are the foundation of good advice. Currently, the record keeping obligations around the code only sit in guidance. So they sit separate to the code itself. What we're going to do is we're going to elevate that into a binding code obligation. And that's because accurate records are essential to ensuring clients receive consistent, high quality service, that you've got defensible records if something does happen, if there's a complaint or there's an issue. But what we don't want to do is necessarily create a specific requirement of what needs to be in the records, how they're kept, how they're managed, but what are the best practices that sit around record keeping. So we're going to consult with you on what kind of records you should be keeping, what format works best for keeping those records in, and what kind of circumstances you might have come across where you've had to produce records, so that we can support everybody in maintaining the right kind of records in your files and for the benefit of your clients, but benefit of you as well as professionals. Di mentioned earlier, and Richard mentioned as well, we're going to move to a 5-year review cycle as well. At the moment, the code gets reviewed every 3 years, and so more or less you're looking at an update to the code every 3 to 4 years. That's actually not a long time for a code to be written and developed, for you to implement it within your practices before you're starting to review it again and then starting to change the requirements and the obligations and how they sit within your practices. So extending it out to 5 years gives you, as professionals, profession more broadly, proper time to embed changes. It provides stability. It means clients benefit from meaningful embedded reforms and code obligations rather than constant adjustments as the code changes at this point every roughly 3 years. So we'll retain for the capacity for targeted amendments between reviews where they're needed, but on the whole, you should have more stability in the code that's implemented with 5-year reviews and amendments that flow through from that, rather than a constant 3-year review cycle. We finish one, we start another. So we'll finish one, do a rewrite, implement it, start another one. It's just a constant cycle. So that's what we're looking to do in moving to 5-year review cycles. So those are the recommendations that the board's supporting, and we will start to look to implement. And Di and I are going to talk through about the consultation process in a moment. In terms of some of the recommendations that came through that we are going to take an alternative approach, one of the recommendations, well, actually two of the recommendations were in relation to making the code a promise to clients and to make the code contractually enforceable. In terms of the first one of the best practices that we're seeing globally in terms of professional codes in particular, but also industry codes, is a move to make them understandable for the clients that we're serving. This helps the clients, but it also often helps you as professionals, because a lot of codes have traditionally been written in very legal regulatory language. And as practitioners on the ground, sometimes some of that stuff doesn't necessarily make sense perfectly in the real world. And we've got compliance obligations and rules and registers and things that are designed to make sure we comply with our code obligations. But it doesn't make it easy for us to sleep at night knowing with confidence that we're complying with the code. So what we're going to do is rewrite the code in plain English to make it easier for everybody to understand. That's not going to change outside the code obligations that we're looking to consult on. It's not going to change the code. It's not going to change the code and the way it operates. It would just be written in a way that's easy for clients to understand. It should also be easier for you to understand, and you won't need to have a legal degree or 20 years of compliance knowledge to understand what the code's asking you to do. So that is the biggest change that you will see from the code. There is a lot of academic literature and research around what, I'll use the term plain English, looks like. Obviously, in different countries, they're in their own language. But in rough terms, what we'll do is take the code from a quasi-legalistic style to Year 12 English level. So it'll be much easier to understand. One of the other recommendations was that the code could be contractually enforceable. You may be aware that some other industries have contractually enforceable codes. So, for example, the banking code is contractually enforceable on the banks. The ICA is looking at making the insurance code, the general insurance code, contractually enforceable on their members as they're looking to do the review. What effectively that means is that the code would become a legal requirement for you. that's not the way professional codes operate. Professional codes build on the law, build on the regulation as a promise of best practice by the profession to their clients and customers, and that's the right way to frame up and position the code. It's the way we should operate as professionals, not the this is what we must do. So we won't be going ahead with contractual enforceability, and we'll be looking to align with the way best practice works in other professions. There were recommendations to create mandatory templates for transparent disclosure. I don't need to tell you that the requirements of your mum and dad clients versus your small business clients versus your large business clients versus particular professions and industries have very different needs and very different understandings of the way insurance works, and trying to force them all into a structured template is not going to work effectively across the profession for the benefits of our clients. So we aren't going to mandate particular templates, but what we will do is provide guidance around best practice in terms of what needs to be disclosed at particular times, and the specific clients that you should be doing those to. So you've got clear guidance around what best practice looks like there. Finally, one of the other recommended approaches was to bring the FASEA Standard 9 obligation around good faith into our code. FASEA, if you're not aware, was the standard setting body for financial advice and financial advisors, and recommendation 9 was around good faith. The challenge with this one, apart from financial advice regulation and law not being right for insurance broking, is that good faith obviously has a very specific meaning, and it's very well established, and there is a lot of case law around insurance law. And so the duty of utmost good faith between insurers and the insured, these are important terms. There's important context around those, and it may create genuine confusion if we start to use non-insurance terms in the wrong way within the code. What we will do is articulate professional obligations clearly. We'll do it in a language that fits the insurance broking regulatory framework and the products that we provide recommendations with, but we're not going to create unintended legal ambiguity by bringing terms from other professions into our code. Finally, there were recommendations, as I mentioned, around investigations that the IBCCC should undertake. So four of the recommendations that Phil made were in relation to those. Those were investigating disclosure practices, investigating conflicts management, investigating personal versus general advice, and mandating specific annual inquiries that the IBCCC should undertake. That's a matter for the agreement between NIBA and the IBCCC in terms of how they're funded, how they operate, what kind of investigations they do. And so NIBA will be working with the IBCCC and the AFCA Code Monitoring Group to manage those recommendations and how all that operates. So that's what we are going to be working on. Just got a quick poll that we want to get your feedback on. I'll give you a bit more context at the end why we're doing some of these polls and how we're going to use them going forwards. But Kiara, if you can launch the poll, hopefully that's coming up for you. There you go. So which of these changes that we've talked through will have the biggest impact on your practice? So extended remuneration disclosure, enhanced vulnerability provisions, explicit record keeping obligations, the earlier renewals of contracts, so moving from 14 days to 28 days as a code obligation, and consolidating conflicts of interest section into a single section so that it's in one spot for you. So from those results, Di, I might bring you in on these. Contract renewal from 14 to 28 days and extending remuneration disclosure seem to be the two that have come up as the highest.
Yep, probably not surprising. And I think when we have our discussion next, the one thing with the renewal contact, it is the most breached area of the code now that's reported. So I understand that there'd be concern about extending that from 14 days to 28 days, but also understand there'll be clear guidance around this is not, it shouldn't be taken that you must have the renewal invitation to the client 28 days out from renewal. It is very much about the contact, and the last part of research that NIBA have done, which with consumers, that actually shows insurance broking in an extremely positive light. One of the things and one of the areas of feedback was specifically something that our clients actually want to see is earlier engagement and earlier contact with them. So I think we need to be very clear, and I would understand because that is the most area of breaches, so it's understandable that it's the most area of concern, but it is also something that our clients are looking for in that research that we did. So the important thing from my point of view as a broker is about understanding what that earlier renewal contact actually is, but certainly not having the renewal invitation out to the client, and if we don't have it out, it's a breach, because as brokers, we all know that we can't get the documentation to the client until the insurer provides it to us. And once the insurer provides it to us, there's things we have to do. We have to look through, check it. Is it correct? Should that trigger some other conversation with the client before we send the renewal invitation out? So very much understand that, and I agree, it's potentially going to have a big impact. However, in a lot of feedback when talking to other brokers, it's something that in the main, a lot of brokers, and probably most of you on the call would say, well, we start that renewal process 6 to 8 weeks out for most, if not all clients anyway. And sometimes we are challenged by clients not responding to us as well. So we certainly know all of that, but this is where the consultation comes in as really important for guidance on how the code should actually be written, so that we're actually providing absolute clear direction on the code expectation that clients can expect that contact, but what that contact actually means. I think in the current code, we talk about engaging with the clients, but I think to Ben's point about plain English, that's one area where plain English can really help us and guide us to avoid breaches in the future.
Yep.
We'll get into remuneration a bit in a minute.
I was going to say we'll get into remuneration in a second. All right. So what are we consulting on? As Richard stated at the beginning, this is your code, and we want to hear your voice around how we make changes with the code in 3 areas in particular. Some of the areas I talked around, I think, probably make sense, and that certainly came through from those poll results. Others are obviously going to be changes that are going to impact the way you do business, how you work with your clients. And so these are some of the important issues that we're consulting on and would like to get your feedback on. So the 3 areas in particular that we're looking to get some feedback from you, and obviously the first one came up just then in the poll as being the second area that's of concern with those changes is around extended remuneration disclosure. So the board has agreed with the recommendation from the review that remuneration disclosure should be extended. And as I mentioned before, we're talking about extending it to all retail clients based on the Corporations Act. Well, actually, it's one of the questions we want to ask.
Yeah.
What should the definition of retail client be? Should it align with the Corporations Act, or should it be something else? But then what should it look like? Where should that disclosure be? When should it be provided? So we've got another poll that will come up, but do you have thoughts on this, Di?
So I think, and the poll is actually probably asking one of the main questions. I think in terms of what it should look like and the definition of a retail client, we all know there's two questions to be asked. What type of client is it? The answer to that is yes. We go on to the second question about product. If the answer to that is yes, then under the Corps Act definition, retail client. What we're saying is that if the answer to the first question is yes, then forget about the product in terms of remuneration disclosure. We just disclose the remuneration, and I know in discussion with brokers over the last few years, they've been implementing this in their business. And a lot of brokers already do this anyway. But there was discussion around whether it should be at quotation and new business at invoice time of the new business or the renewal. Should it just be at quotation? Should it be when the client requests it? And so an answer to this would help guide what it should look like or when it should be provided. And I think what it should look like is, again, there was a recommendation for one template of remuneration disclosure, which the board discussed at length. And the view is that everyone's got their own different business model. And so therefore it's important that everyone be able to use their own business and their own way of communicating this to the client. What I should say is that it will not, in this world of client expectation, it will not be enough to put it on page 55 of a 60-page document. We talk about our professionalism and the need for transparency. And so what it should look like, I think, is important to understand that there are a lot of different business models in insurance broking, which are dictating how that should look. But where it should go is probably some clear guidance around what is acceptable and what isn't is important. But again, consultation about what that actually looks like is important. And here, interestingly enough, the most common view is that it should be at both quotation and invoice time. So that's interesting, probably different to what I was expecting it to be. And this is why the consultation is so important, and why it's important that you have your voice and you take the options, which we'll go through a bit later on, for consultation with Ben on these things, because we want to know about it now and not after the draft is done. If the draft is done and then everybody's got an opinion, it's going to slow down the process even further, which is not helpful. So we're trying to get the message out there, have this discussion now. And that's an interesting observation.
Yeah. The second area we are consulting on is vulnerability provisions. As I mentioned before, we already have them in the code. So the question is, how should we strengthen them? Kiara, if we can get the poll up. Questions we need to know. So what, in terms of voting, beyond catastrophic events, floods, fires, things that we've seen a lot of over the summer, what should trigger and enhance support for clients? Select as many as you like on that one. But, Di, what sort of circumstances should trigger them? How do brokers identify when they should apply or not? And what kind of training
From my experience, well, the training's critical. And certainly there are lots of different training modules for people to attend on identifying vulnerable clients and what that means. Because once you identify vulnerability, it's what it means in terms of how you approach whatever the situation and circumstances is at the time. And it'll be interesting to see these results. But I think one thing that's not on there that I often see is that a client at claim time that is not a vulnerable client. And I do think insurance brokers are in an excellent position to pick up on vulnerability. And I feel, in my experience, I don't see cases very often where we've failed to identify vulnerability. But certainly there are times, many times, when we go through particularly a claims process where the client was not vulnerable at the start of it, but becomes vulnerable through the process because of the process and what they're experiencing through that time. And I think that's an important part to also put on the table. And it's good to see that people see, I would have said all of those things are triggers for enhanced support for clients. So I wouldn't have expected any different result from that, really.
No, that's good to see. But also, that point you just made around what's not on this list that we might need to be aware of is something that we'd love feedback from members through the consultation process. Thank you for answering those polls. The last one to tie up all of this is record keeping obligations. So we're going to create through the code some obligations in terms of record keeping obligations. They're designed to create best practice for you and professional guidance around record keeping. From your view, Di, what sort of records should we be requiring? What sort of formats? How long? Under what circumstances?
So I think about, and probably a lot of people start to think about, we've already got some record keeping requirements in terms of FSGs, PDSs, etc. But here, when I think about this, I actually think about when I started my insurance broking journey 40 years ago, one of the first things that I was told is that you record everything. And if it's not documented, it didn't happen. And I think this expectation comes a lot from cases that AFCA would see, where, and we've probably all had, if we're honest with ourselves, we've all had instances in our own broking operations where the record keeping when something goes wrong is not as it should have been, either to support our people or to support the client in what we need. And so it's a very subjective thing. I actually said to someone one day, they had we were talking about record keeping, and this is probably 20 years ago. But they turned around and said, yep, I record everything that's important. And so my question was, what's important? And they actually couldn't answer that question, because I said, how do you identify what's important and what's not important? Because until you need to find that documentation, you don't know whether it's actually important or not. And I think this is a critical part to get right of what should be kept. How we should keep it is probably, again, a business decision to be made, but interested in consultation with members about whether they have any set views about whether there should be. Clear, direct. A lot of us have document management systems now. I particularly love the document management system. It's secure. It ticks a lot of boxes, as well as being great tools for our people to use. And then when might records need to be produced? Again, think about and providing feedback on all of the instances where records need to be produced, not just when. I think for me, the immediate thing that comes to mind is when something's gone wrong and I'm trying to piece together investigate a complaint, things go through our IDR process. That's really where the documentation of not only keeping all of the documents, but actually recording conversations and documenting the outcomes of those conversations, confirming the outcomes to clients and to insurers where it's necessary, really comes to the fore and makes the job when you're dealing with complaints or disputes. It's really important to have that information there to support your people, to support your clients, and support the right outcome.
Thank you, Di. So those are the three main areas that we think your expertise, your experience, what goes on in your particular practices, what you see with your clients, are useful to get feedback from in terms of how we draft up the code. But if you have different views on any of the other 11 recommendations that Di talked through earlier, we want to hear from you around those. Equally, is there anything that was missed in the review or anything that you have thought of that you think the code could use a tweak or a change or a new section on that you have been thinking you want to share with us? Now is absolutely the time to do it. And it's important for us to understand, in NIBA and NIBA head office, and as we're drafting this, how the code helps you serve your clients today. What's beneficial for it? How does it work? How does it help your clients understand what you're doing? What's working well? Not just what needs to change. What needs to stay the same, and why does it need to stay the same? So that's part of the feedback we are looking to get from you through this process. So now it's time for you to have your say. We've released a consultation paper, so that's available now at the NIBA website at Code of Practice Review. So if you use the drop-down menu on the right-hand side of the site, and then go across to the other side, the first menu item is the Code of Practice, and then below that is the Code of Practice Review. So sitting there is a consultation paper that goes through the recommendations, the NIBA's board's view, and and some consultation questions, and you can just send us an email, write a document, record a video, whatever takes your fancy, to give us your feedback on that. If you want a more structured process, there is an online response form. We're using Jotform. So it's a quick and easy way for you to share your views. We cover all of this, but if there are specific areas that you want to give us your feedback to, you can just go to those particular questions and sections and give us your feedback on those. I've set it up in a way that as much as possible, there's just tick boxes for giving us the feedback. But in some areas, if you want to give us your broader views, there's space for you to write those out. As I said, you can email submissions to code@niba.com.au. If you want to get in touch with me or want to have a conversation with me, code@niba.com.au is the email address that we've set up specifically for this code review. Through March, so starting the week of the 9th, I don't have exact dates yet, but if you have a look at Broker Buzz, we're going to be doing Teams forums. So we are going to set up a Teams meeting where we will have a conversation with you about this and allow you to give us your feedback directly as part of that Teams meeting. We will also be doing that through some of the networks as well, but I'd encourage you to come to these forums on Teams that we'll set up so that you can give us the feedback directly, and I'll lead you through a conversation. We'll have a chat, get your views around some of these changes that we're talking about. And then the workshops will take place with key members. So those will run through March as well. As Richard said at the beginning, the consultation closes on Thursday, the 2nd of April. And if you have a view on the code, if you've got thoughts on how we make some of these new obligations, if you've got thoughts about what's working, what's not working, don't think we know the answer. Don't think somebody else is going to give us your views. They're not. We need to hear from you. And that's going to give us the basis and the backing to make the changes to the code that have been recommended, that the board have instructed us to put in place. But more importantly, make sure the code works for you and works for your clients.
Hey, Ben, I thought I might just jump in here, if that's okay, and go to the last slide, just with a couple of minutes left to go, and just say to both Ben and to Di and to everyone gathered, thanks for taking the time. I'm hoping you're getting the sense and the confidence through this discussion and all the other things that we've been doing, that we're in this together. We have capability, we have expertise, we have intent, we have will. And we need to do it together. So treat this, if you're kind of clocking onto the code, make 2026 your code, your voice would be appreciated. Di did mention the research that we've just released last week. A lot of our thinking is founded in research. So last week we launched a piece of research around what consumers are saying about brokers, what's important, the green document, complexity to clarity, really valued reading as it frames and allows us to really keep our finger on the pulse of what advised clients are saying and thinking. It's large, medium and small businesses. It's the voice of the business owner coming through loud and clear. And that's why the code interacting with where clients are at becomes important. But we also did a piece of research late last year on radio reacting, which pulls together some of the voice of broker on some of the key issues. So commend both of those two things to you. Definitely commend the code process to you. Watch out for Broker Bars Community Hub. Lots more information coming soon. Big round of applause, virtual. Feel free to use your emoji pins. A big hat tip to both to Di and to Ben and to yourselves. And we look forward to seeing you on the next chat and bat channel. And for now, have a great afternoon. Thank you, everyone.
Thanks, Richard. Bye.
Thanks, everyone.